2:11 p.m. Pacific Standard Time. What do we have before us? Best Buy. Best Buy hasn't had a gap down on an earnings miss like this. Tis year is 2014. You would have to go back 11 years ago. That's how bad it was for Best Buy. But let us not forget that Best Buy was a great story when we started out back a year ago, just the opposite. In January, Best Buy was on sale down here at $12 a share, and it ran up to the all-time highs, and it was pumped up there through the calendar of 2013. And just let me be very clear about one thing. Once again, the consumer is not spending like they used to, because Best Buy was, listen, when we take a look at the history of Best Buy, we can go back over here to the highs of Best Buy back in year 2006 and 2007. In 2008, it went straight down, and then it bounced back up in 2010. Soon as we got to the highs in their recovery plan, it went straight down again. And it wasn't until last year in January, a year ago, when Best Buy took off running and never looked back. Now, when I say that Best Buy missed the quarter, and not only that, the most important thing is to understand that Best Buy is not selling. That means if the consumer's not buying a lot of gadgets, then how are the semiconductors and a lot of these other ones going to do well? They're not. This is the range. There were dip buyers. I want you to know 84 million shares traded. Yes. I want you to know that 25.78 was a low, and the last print was $1 off of those lows. And from the gap down, the high was only 28.20. You only had a $2.4 and 2 penny range, $2.42 here. Yeah, it's printing right here. People will bottom fish it. I will say this: you don't buy a failing business plan, because you don't. And once again, unlike other times where the bull tried to always step in, it was proven how wrong they were in Best Buy. The key is the consumer. If Best Buy's not selling a lot of gadgets, they are a huge, huge company. And either Amazon is getting some of that business. Instead of going into Best Buy, they're buying online. But that's only 1% of the population in America. So that could have something to do with it. We're always going to look for what we call a market maker trade. And the following is that when we take a look at how this earnings season started, not only that, don't you remember this one, BBY? That stock is still down here at 66. This was another huge drop in the retail sector. One of the things that doesn't add up in this recovery is the fact that the retail sector is not outperforming the broader sector, because it's not. And we always see that after Christmas, going into the new year, that the holiday shopping season was great. And then you get into January, kind of like you did over here in Best Buy last year. And you did it in a lot of retail stocks last year. So it was a great buy down here at $12, sure. Yeah, and the highs are right over here. So let's take a look at these highs. And once again, they are repeating the very same behavior as they did in other calendar years. This was when we had in 2013, we were over here, but let's just bring that support level up right here so you can kind of see it better. MMTs. And right here was the bottom of that breakout at 25. It tested it today. And that was the old support. And it burned all the way up to the top. Yes, it did. And not only that, the turnaround story isn't there. And we know that the older guy that used to be part of Best Buy, he wanted to buy a lot of the Best Buy shares and take it private. But then we got a new CEO in there, and they turned around the story, and they did. But then there's something wrong. And the wrong part is the consumer is not spending. There is a crack in the consumer right at the moment. And let me just tell you is that, listen, we had a great rally in 2013. They bid all of this stuff up at the highs. So what? But we've seen this story before, and we've seen it too many times. So, anybody that owns it, hey, it's time to get out of it. And the people, as far as the bull community goes, they're really feeling the house of pain right now. Yeah, that's a support level. Yes, there would be a time. Look, there's always a fast trade in everything. And I just want to show what the size of the gap is, where that support level was. And the problem is that retail sector, we've covered it, and we've covered it for over 30 years. The thing about it is, if this one is broke, a lot of them have already been broken too. And that's a big change, and that's something to be concerned about in this 2014. We are in January. Today is the 16th, and it's 2:18 Pacific Standard Time. Markets are closed. Now people are going to scratch their head. Yes, everything gets short-term oversold, but our MMTs are going to do the following. Any move higher back to other areas such as $30, and not only that, any move back up to other areas such as 27.82 is that we're going to sell short. And why? Because the stock is broke. There it is. And it has not had this kind of event for 11 years. When something doesn't do this for 11 years, there's got to be a lot of other things that are going to be like that too. And what I will say for now is that January 2014, we're in the heart of the earnings season right now. And we haven't had a very good scorecard. Of course, we have Big Tech's going to come out next week, and we're going to have the first monthly options expiration upon us tomorrow, which will be 1/17 of 2014. And yes, there's always a trade, but I would not want to be a buyer to hold this one, because if the problems have started here to this magnitude, then there's a lot more to follow.